It's a story we've been tracking for several weeks now. We understand that Flipkart and Snapdeal have today signed a non-binding term sheet for the merger. This is along expected lines. Kritika joins us now with more details. So, Kritika, another step closer to that eventual merger, a non-binding term sheet being inked between Snapdeal and Flipkart. Where do things currently stand? Due diligence, I understand, started last week.
Yeah.
How much longer will we have to wait for this to continue?
So, Shireen, to address the first part of your question, as far as where things stand right now, remember on the 11th of May, we were the first to report that Snapdeal and Flipkart had signed a non-binding letter of intent that allowed them to enter the first phase of due diligence, which basically included getting a status check of the warehousing, getting access to each other's financial balance sheet, etc. Now, the second phase of due diligence involves going into the larger aspects of operational synergies and pretty much beginning the process. For that, they have signed a non-binding term sheet. As the name suggests, it is non-binding. So if at all there are any disagreements in the process, either of the players are free to pull out of the term sheet altogether. But in a sense, the reason why they have gone ahead and signed a non-binding term sheet and not signed a term sheet altogether is simply to put this on the dotted line that yes, there is a deal on the charts, and most of the contours are pretty much on track as what we had reported. Shireen, valuation of $950 to $1 billion. Snapdeal, SoftBank will be buying out Kalari Capital. They've already bought out Kalari Capital. The boards have given their nod, and about 1 month time to sign the binding agreement, and 3 months is the timeline that they're looking at to close the deal.
All right, let's bring in reactions now. Kashyap, Deorah, founder and CEO of Hypertrack, with us. Also, Arvind, Singhal, chairman of KSA Technopak. Gentlemen, appreciate you joining us. And Kashyap, let me start by asking you, you've been tracking this story right here with us on CNBC TV 18. It's another step closer to that proposed eventual merger, a non-binding term sheet. But the fact that now most investors are on board, SoftBank has been able to buy out Snapdeal's existing investors. You think this sets the path clear now for that proposed merger?
Yes, thanks for having me on the show again, Shireen. I think this reflects SoftBank's commitment to investing in e-commerce in India. They are, like I said in the show the last time, they're taking a market position on e-commerce in India. They've made an investment in Paytm, and their first bet, Snapdeal, did not work out. So now they have decided to transfer the ownership into Flipkart, and they had to pay up for that. They had to pay Flipkart shareholders as well as Snapdeal shareholders to make it happen. I think this reflects SoftBank's commitment to investing in e-commerce in India in the long term, and they're taking a market position with flipping their Snapdeal bet into Flipkart and paying up for that, as well as taking a large position in Paytm as well.
Okay, Arvind, Singhal, just to take that conversation forward with you, what do you think that this is going to mean as far as the retail landscape, the online retail landscape is concerned, where it now becomes Amazon versus Flipkart and Snapdeal together?
Shireen, I think Snapdeal in any case was actually in the very last stages of its survival for the last several months. So while on one side, yes, it's end of a story, so to say, if it happens finally as far as Snapdeal is concerned. It was one of the earliest startups in this space, from a deal side to a marketplace side. So one feels sorry about, a company going out like this. But I don't think it is going to materially change the retail landscape as much as it's not really a merger of two large companies coming together. It's almost like, in my opinion, a distressed sale as far as Snapdeal is concerned. They didn't have any choice. I'm not very sure how much Flipkart is going to gain from this acquisition. I think it's more a financial merger as opposed to a strategic merger. So that's the way I see it, that it's not going to really change the retail landscape as it stands today that dramatically.
Okay. Manish Maheshwari, the CEO of Network 18 Digital, also joins us now and, of course, has had experience with Flipkart. Manish, appreciate you joining us here. Arvind Singhal there saying that this is not going to really change the retail landscape because this is a matter of survival for Snapdeal, so it's not really a strategic merger in that sense. Also questioning the rationale for Flipkart to have gone ahead with this particular transaction and what this brings to the table as far as Flipkart is concerned. Your comments.
Yeah, so I think, Shireen, thanks for this opportunity. So at a macro level, I think what's probably happening is a bit of a consolidation in the industry. And also, to me, it seems like more like an investor-driven thing because honestly, I don't see there is much value from a Flipkart perspective to acquire Snapdeal because most of the people who are shopping on Snapdeal are anyway on Flipkart and most of the sellers who are selling on Snapdeal anyway are on Flipkart as well. So there's not much of a value there. But having said that, probably, from an investor perspective, it does make sense for them to fold one asset and fold it into the other one and sort of mitigate their losses. The marketing spend and the customer acquisition spend and the seller acquisition spend. So that's probably how I look at it. And I think this was in discussion for quite some time. I think the investors were probably working on the deal terms and valuations and sort of the early investors, Snapdeal, what kind of exit they would get. So it seems like all equations are getting aligned for that. So it provides more of a respectable exit to the people on Snapdeal side. And I think in my mind... Yeah, go ahead.
That's a nice way of putting it. It provides a respectable exit to the founders of Snapdeal. But Manish, as both these sides come together now, and we understand that the senior management of Flipkart and Snapdeal will start their meetings now. The due diligence, of course, has been on. But what do you see as part of the integration challenges? While this seems to be an investor-driven move, both have to now move forward. So in terms of integration challenges, what do you believe is going to be the biggest issue?
Yeah, so I think for some time probably they will probably run as separate units, but I think very soon they would try to, if I were on Flipkart side, I would try to migrate all their sellers on Flipkart platform and all the customers also on the Flipkart side. And probably, try to cut down losses on the Snapdeal side as much as possible and try to get a sort of as good a possible valuation or sort of the sale of their key assets, which probably do not fit into the bigger scheme of things. And I think anyway, I mean, what we were hearing anyway was that most sellers were anyway abandoning Snapdeal because of the recovery, the payment delays and so at least this provides some kind of a relief that they don't have to do a fire sale of their inventory and other things. For some time.
Okay.
The other thing could also possibly be is, they could try to also be more synchronized in terms of how they do the sale and offers in the upcoming Diwali season. Because if you notice, Flipkart has a big billion day sale, and which used to always, there used to be in terms of offers and all that.
They were competing with Snapdeal,
Yeah, exactly. So I think in my mind, from a Flipkart perspective now, I think they would only have to now focus just on Amazon and in the upcoming Diwali season. And I think that to that extent, I think they'll be more efficient in terms of how they run their offers and schemes when these.
Okay.
So I think that's probably another interesting angle to look at.
Capital conservation probably going to be part of this strategy as well, at least as far as Flipkart is concerned. Let me give Kashyap the final word here. Kashyap, before I let you go, what do you believe will be, and the same question to you, what do you believe is going to be the biggest challenge as the integration process starts? At least in the interim, we understand that Snapdeal will continue to exist as a separate brand, but what do you believe will be the big challenge?
Sure. I think it's just like the merger, the acquisition, whatever you want to call it. It's a financial decision taken by investors. And the person running this group of companies, not just Flipkart and Snapdeal, but there's Myntra, Jabong, there's a bunch of other properties that have been acquired. It's more like a conglomerate. It's a financials-driven company. And the first point of integration is going to be the financials. And I think they will just look at the profits and the losses and start from there and figure out opportunities to grow the top line and to reduce the burn. I think just as investors or CFOs operate, they will probably be ruthless about getting to break even, and they'll figure out whatever opportunities they have to get the financials in shape here. The operations and other stuff will be an outcome of the financial decision, I think.
Well, Kashyap and Manish, we are going to be getting back in touch with you because it's not done just yet. It's the first step. The non-binding term sheet has been signed, and we understand that this is still going to take at least a few more weeks. But thanks very much for joining us here this evening on CNBC TV 18. So that's the mega merger, which has been on the cards, on the anvil for a while now, one step closer to becoming a reality.